Hello, everyone, and welcome to episode 3 of the gold series we have been doing in the last couple of days. Now, in this episode, I want to conclude and finish by showing you how Bitcoin came into existence, what it's doing similarly to gold, and why both Bitcoin and gold are steadily on the rise. Digital gold and physical gold basically on the rise, and how they are trying to fight, because you can see now gold is really on the rise because we are sort of trying to fight the fiat system that was created since 1971, and that is being trying to control as the world is trying to create a new monetary world policy where everyone can believe in this new trustless system. And I'm going to teach you what trustless is, because a lot of people say Bitcoin is a trustless system. But what do you mean currency is trustless? I need to trust this system in order for me to trade it. But before I get into that, it is important to mention that this episode is proudly brought to you by Paperstone, our official trading partner here in Kenya. And if you don't have an account with them, please open and trade with Paperstone below, and start your journey with them, or continue your journey with them, the best broker in town. Also, moving forward, I said this in the last episodes and I'll say it here again, Ken and I have at Financial Hub, we have one more training class that we're going to do ever. Yes, I said that right, ever. We won't be having any other training class after this one. And in this class, we're going to do it extensively and deeply. And also for the students who already did their classes with us, you have the opportunity to come and do it with us again at a discounted price, which you can text our WhatsApp number below or call our WhatsApp number below and talk to our team to get access to that and what it entails. But in this, we're going to be diving extensively into our new and updated trading strategies that we've been trading, which is much better than what we had a couple of years back. So if you are a student of ours who needs a refresher course, this is for you as well. But for those new students, this is also for you, because we bring you up to speed with how we trade, the new markets that we trade, which is the indices, the commodities, as well as the crypto markets. And we'll also give you access to a full-time prop firm trading course that shows you how to be able to pass prop firms and trade them professionally and consistently for the long term. So, and much more. This will be live classes that we'll be having every week for Ken and I, which will be starting sometime in November, and we'll update on the dates soon enough. So, now with that said, let's continue with where we last picked up from. The new system that the Bitcoin and the digital currency has come to control. Now, the last we talked about how the currencies went into a system called the fiat currency, or the fiat system, where the currency can be printed by a certain government into oblivion. We've seen this. No fiat currency existing has ever successfully lasted because of human greed. If you go back to the Roman, is it denarius, or the currency that they used, to the Zimbabwean dollar that recently we had, the Argentinian currency, we've been seeing it having, the Turkish lira has been on a crazy rise, devaluation. Okay, basically all fiat currencies from A to Z have all gone to zero. They've all crashed. So we need a system that can last through the times, a system that can be trusted by the people, a system that can overlive the people in power, not controlled by them, okay, but controlled by the people. And that is the system we're moving into, the digital age. So back in 1971, when President Nixon signed and we went into the fiat currency, and we've talked about gold here, how it moved from $35 to now we are at $4,000 per ounce. You can imagine that crazy growth in terms of valuation. But it was long precedented, it was long expected, and that is what we're also waiting to see to happen to silver. But I said I'll talk about silver in a different video, where silver hasn't really had that rally like what we're seeing with gold. But today's topic was more or less on gold, not silver. Okay, we'll talk about this in a different video, where silver is a little bit left behind. But today I want to talk about gold and Bitcoin in a nutshell. Now, the disadvantage of having fiat currencies is that these currencies could be printed into oblivion at any time. We saw what happened during quantitative easing. Now, quantitative easing is just a fancy way of saying we're going to print more money also digitally, okay? Because money is most of the time always being printed. But during the 2008 financial crisis, we went into quantitative easing one, where the Federal Reserve said we're going to bail out a lot of banks and a lot of companies that were crashing at the time, and the best way of them to do it was to do it digitally. Okay, now this is not Bitcoin, this is just digitally numbers being printed into economy, with the fact that they're going to buy government bonds and treasuries. Okay, and that's what happened in, so from a short amount of time we went into having trillions and trillions of dollars being printed. During COVID-19 alone, that 1 year, almost $2 trillion, even more, was printed out of oblivion because we do not have anything to control. Now, when this is done, it tends to make the rich richer and the poorer poorer because it steals from the poor and enriches the rich. Why? Because look, the Federal Reserve, when they lower interest rates, it makes now, and this is basically a system that is necessary as well. Okay, so as much as it can affect those ones in power and make them much more rich and much more powerful, taking away from the have nots, giving more to the haves, it's still a necessary process that needs to be done, and that's why it's important for you to be financially literate in order to be on the safe side, on the right side of these transactions and change of paradigm shifts. Okay, so what basically happened, and I'll take the example of COVID because we're more or less really familiar with it. It happened at a recent time as compared to 2008 crisis, where many people here, some maybe weren't born, and some were still very young at the time, so we don't have that recollection of what actually happened. But looking at what happened in 2019, 2020 COVID, which also happened around the world, so everyone has this understanding. The Federal Reserve, which is the United States, lowered interest rates to what we call ZAP, okay? What we call ZAP. Let me type it here. Yeah. Okay. These are just notes that come in here later. Into ZAP. Okay. Let's put it in capital. Zero interest rate policy, where where inflation, I know not inflation, but interest rates were ranging between 0 to 0.25%. Sorry, not 0.25%, where basically borrowing money was cheap. Okay, and anyone could borrow money. Now, when the economy has gone down, this is sort of a quick way of boosting back the economy, because economy, look, it's run by businesses and supply and demand and trade. Trade is what runs an economy. Yeah, you give me that, you give me this. Yeah, create value, innovation, and all that. Now, innovation needs to be paid for by the people, and that's why we pay for many things. We pay for cloud computing, we pay for Netflix, we pay for storage, we pay to buy phones, we pay to buy computers, we pay to live in a house. Everything has a transaction. So when the economy went down, there's not much transactions. So a good way or a quick way for the government to do this is for the central bank to lower interest rates, which makes borrowing cheap, so that people can borrow cheaply and more money can come into the economy and spending power can come back on. Because look, an economy is always relying on spending power of the people. If there's no spending, then there's nothing that's moving. Everything is stuck and stagnant. So we need this money to circulate in the economy by people buying and selling, selling of goods and services here and there. All that is what runs the economy. So that needs to be done. That is economics 101. Okay, now that's what they did during COVID, and they did a lot of interest rates, and that's why you see the gold prices also rising during such a time, because quantitative easing basically means we're going to devalue the dollar more. We're printing, there's let's say for example $1 trillion of dollars existing. Now we're going to immediately double that to 2 trillion, basically meaning there was $1 trillion of dollars, which was very valuable. Now we can get access to more, meaning it is less valuable than it was a day before, or before the printing of currency. Okay, so that's basically what happened, and it really devalued a lot of things, and that's why gold normally acts as a safe haven when such things happen, and that's why you see a lot of gold on the rise and markets really rising since 2020 COVID down here. You can see since 20 here, somewhere here, 2020 here, Gold has just been steadily on the rise. We haven't gone below pre-COVID levels, which was at 1400. Gold has now almost tripled that value since in the last 5 years alone. Gold has tripled that value because of what is happening around the world. Now, Bitcoin is what is also coming to help this, or what has come to help this. Control the greed of humanity and go back into a digital sort of the gold era, but a digital gold era where Bitcoin will sort of have, not will sort of have, but has sort of the same characteristics of gold. Okay, and that is what I had here, and I want to explain to you gold versus Bitcoin. It's very much similar. So this is not even gold versus, it's gold, Bitcoin and gold. The properties necessary for a good monetary system. Scarcity. Gold is naturally limited by earth supply. Bitcoin is hard-coded limit for 21 million, which will have maximum supply by 2140, year 2140. It is durable, doesn't decay or rust. Bitcoin cannot be destroyed digitally. Divisibility. Gold can be melted into smaller amounts. Bitcoin can also be divisible into 100 million satoshis, very, very small units of Bitcoin standard. It is portable, heavy, and hard to move. Okay, portability. Okay, it is heavy and hard to move. Bitcoin is instantly transferable across the world. Instantly. Okay, by the time you order gold, by the time you get it, my friend, it is very hard. Recognizability. Visually unique and tested. Verified mathematically via blockchain. Okay, so it is verified, and this is where I was telling you I'm going to explain to you the difference between a trustless system. Okay, a trustless system is where we are coming out of the system where we need to trust. For example, the fiat system, we trust the banks, we trust the government. But are these people really meant to be trusted? Because if you understand fractional reserve banking when it comes to the banks and how they create money from your same deposit and how they multiply it 100-fold, then you won't really trust the bank because they print money out of thin air, out of nothing. If you go to the government, depending on who is in power, they can easily devalue your savings, your money, and just lose value overnight. Okay? That is the trust that cannot be fully given to these systems. And when we say trustless system and Bitcoin is a trustless system, is because we come out of trusting, which we can't really trust blindly, and we go into a system we call verifying, proof of work. Okay, so first we start with proof of work, where everyone can get access to the proof of work once a certain currency, a new Bitcoin has been mined. Okay, when you solve a new mathematical puzzle, a new block comes into the blockchain and is rewarded with new Bitcoins called block reward. This is known as proof of work. Okay, so the proof of work can be seen in the blockchain. We can verify it. You and me can verify it. And the network effect is when, and that's what another benefit of Bitcoin has, is when more people use it, the more we can trust the system, because more people can verify what is in the system. So you can imagine if the whole world was using Bitcoin and everyone could verify from the point of where they are, then this is a very much trustless system and more of a verifiable system. Okay, so that's what we mean when we say Bitcoin is a trustless system. Okay, hope you understand that. Okay, now let's go back to this. So blockchain, production cost, mining and refining. Okay, this is also something that adds value to gold and all that. And in Bitcoin, digital mining, computational work also makes it the price go up. Inflation resistance. Supply grows slowly, supply is fixed. Zero inflation after 2140. Okay, that is Bitcoin and gold. Now, when you come look at Bitcoin versus fiat currency, what we're used to using. Now, let's look at the difference. Bitcoin, okay, fiat money is unlimited, can be printed at will. Bitcoin is fixed and capped at 21 million. Fiat money is centralized by governments and banks. Bitcoin is decentralized. It's a global network. Gets its power from you and me. Fiat money is inevitable over time. Inflation is inevitable. It must be printed. Bitcoin is deflationary and becomes even scarcer. Trust model requires belief in institution. It requires you and me to believe in the system. When we don't believe in the system, its value will go down immediately. And Bitcoin is trustless. It is verified by code, what I just explained earlier on. Censorship. Accounts can be frozen, cannot be censored or seized easily. This is a very, it can have its advantages and it can also have its advantages. Some of you might differ on this one and say this is much more worse because illegal things can be done online, okay? But those are things we'll curb in the future. And transparency, opaque system, it's basically blank. You can't see the system well. You don't even understand it. Many people don't even understand how fiat money works. But Bitcoin is fully auditable blockchain and everyone in the system understand how it works. And that is why we're sort of moving from this fiat system into a system where things are digital, what we call decentralized finance, decentralized system, the blockchain system, a trustless system, digital system, depending on what you call it, depending on how you understand it. Okay, so that's basically what we're moving into. Personally, I advocate for Bitcoin. I advocate for gold as well. You can see Bitcoin and gold are all on the rise. This is Bitcoin. This is gold, crazily on the rise. At the same time, Bitcoin has also been on the rise. Okay, I see new highs coming very soon, but this is for a different video. Okay, it wasn't for today. Today wasn't analysis, but you can see the same thing on Bitcoin is sort of what has happened also with gold, just that it has its different spikes here and there. Volatility is quite different. You won't easily see gold down 10% in a day or up 10%, but you'll easily see that with Bitcoin at the same time. Okay, so it's important for you to understand where we are from, where we are, and where we are going. Okay, and maybe in a different video I'll speak deeply about where we are sort of moving towards, but that is basically the history of gold and where we are today. So before now as you go and trade and invest in Bitcoin and gold, especially in gold, I wanted to do this for the gold traders. You understand what gold is, where it's from, and why it has its value. It has had its value for over thousands and thousands of years. Until to date, we will die and still leave gold, the physical gold, as an asset that most people will always rely on as a safe haven. This does not mean, however, that we will not have ups and downs. Okay, we will always have ups and downs in the price of gold, but in the long term, you can leave an inheritance for your children's children, including now Bitcoin, into the portfolio of that inheritance, away from land now into gold, away from gold now into Bitcoin, and all that. Okay, so I hope this has been helpful. Have I left anything? There's much more I can say. There's much more we can talk about, the network effect, the future of Bitcoin, and all that. But that's what I wanted to deliver for you people today. Gold has, and I had this quote here: gold freed us. Let me rephrase that. Gold freed us from barter. Fiat enslaved us to governments. Bitcoin frees us again, this time through code. And that is what we're basically moving into. So that's what I have for you guys today. Hope you've enjoyed that series, and I hope it has been helpful. And in future series, you can suggest what you want me to talk about and what other things you want me to do research on. Be it the stock markets, you can also do a research on the stock markets and what the stock markets are all about and how the indices came into being, because the stock market started back in the 1700s in Netherlands, which was at the time a superpower. Actually, if I show you from this book I'm reading, okay, actually you won't see it here. You can come here. I can also break down this book for you, for many people's. Okay, you can see the big shift cycles here and wealth of power, relative standing of great empires. You can see those are time Netherlands in the 1700s was a world dominant superpower. Before that, China was already superpower before. So United States never used to exist until 1771 when they gained independence from the UK. Back then, they never used to exist, and you can imagine in 300 years they became the world superpower. Okay, in less than 300 years they became leading, and this is in the last 500 years. Okay, you can see we had China here. Okay, Then we had Netherlands, which became the superpower as the Chinese declined with a lot of wars and instability here and there. Then the United Kingdom really came on the rise, and they came and broke over here when they were dominating the whole world and colonizing the whole world. They became superpower for a while, okay, just for them to be passed here in the late 1800s by the United States of America. And you can see how China has been steadily on the rise. But that's something for something else. Economics is very interesting, my friends, so it's important to understand the backings of how things work. So let me know below in the comments below what you want me to talk about next and what we can look at in a different video. So like I always say, my job is actually to help you people to stay woke and stay financially literate. And have you noticed something about the new name in our channel? If you haven't noticed, just check it below. We're no longer a financial academy, and we're now more into now financial university, and we want to teach a lot about the sort of university level education when it comes to finances. So that's it. I'll see you. That's it from me, and hopefully I'll see you in the next video. So don't forget to like, share, and subscribe. I'll see you guys in the next video. Peace.